Before we begin, just to prove this is a live trade, here are the credentials. Short 3 lots on this account, and short 2 lots on this account. And it's on a live account. Here we go. This trade was on the NZD-USD currency pair on October 28th, 2020. It was a total of 5 lots shorted, which equals $50 per pip. It was sold at 0.6704 with a 21 pip stop loss at 6725, which means I am risking $1,050 with a target at 0.6510, which means my reward is $9,700. So, my risk is $1,050 and my reward is $9,700. I apologize for the dirty charts, but I purposely left the charts as I traded this trade, so the viewer's experience of this video is as real as possible. And if you like this video, please subscribe and give it a like. Thanks. I start with an overall trend analysis. Price is in a downtrend on the monthly chart. Price is neutral on the weekly chart. Price is long on the daily chart. This daily long trend was due to a fake double top that formed here. The reason why this was a fake was simple. If you scroll back on the daily chart, you'll find that the daily price is in a downtrend. So, the double top, that is a reversal pattern, doesn't have the appropriate trend context. A double top is only legitimate if the trend on that time frame is long. Now, this is where it gets interesting. That same double top on the 4-hour chart is legitimate. For the 4-hour trend is in fact in a long trend. So at this point in time, I'm thinking the daily is poised for a long run, but the 4-hour is poised for a short run. Then I analyze the daily price action to get a sense of how much long strength there is on the daily time frame. There is a long trend line that has been tested many times, but you cannot get an idea of how strong long price is just with this trend line. You must examine how the lower time frame's price reacted at these levels. I go back to the 4-hour chart and discover that the 4-hour price action on the daily trend line is not that strong. Which tells me, if the 4-hour chart forms a strong short entry, I could still take it. What defines a strong short entry for myself cannot be explained in just one video, but simply put, it is the confluence of many short price characteristics. For examples of these characteristics, please watch the playlist Price Action Strategies. Now, the stop loss for my entry strategy is static and never changes. There is no need to contemplate its placement. Which leaves me with the question of targets. In my opinion, the hardest aspect of decisions in a strategy. Seeing how the last legitimate long trade on the daily chart was here, considering all factors, I decide its pivot low as the target. The biggest factor of my decision is due to a phenomenon in all markets. Weak players always get stopped out. In other words, through your analysis, If you find that on an obvious trade setup, for example, a head and shoulders, is fake for whatever reason, but price still moves as if the trade was legitimate, the area or price that stops the weak traders that entered the fake setup is your target. Here we go. I enter short on the close of this 4-hour candle. Then, immediately, switch to the 1-minute chart. After entering a trade, for another layer of precision in your strategy, watch the lower time frames price action to confirm that the momentum on the lower time frames are in your favor. So in this case, I want the lower time frames price action to have momentum short. And at this juncture, price retains its short momentum. 2 to 3 hours later, I check back on the lower time frame and see that although price is pulling back, the price action on this 1-minute pullback is weak. In this case, the peaks are too wide for the pullback to be strong. Thus, I stay in the short trade. Then, another 2 hours later, I see that price have finally began to fall and reach the first possible area where price can possibly turn around, in which case I will abort and close out the entire short position. Let me clarify this. Although the initial target was 0.6510 at the daily pivot low, due to the US elections held next week, thus the possibility of ranging markets, there are several other levels in which I will consider as targets. One is at 0.6681, where a strong 4-hour trend line exists, and the other is at 0.6640, where a strong weekly trend line exists. So, when price reaches these levels, I will watch the lower time frames price action to decide whether or not momentum is still in my favor. Analyzing the 1-minute price action at the first possible abort level, I find momentum is still in my favor. Thus, I maintain the short position. Then, another 4 hours go by, and price reached the second possible abort level of 0.6640. Here, the 1-minute price action started to show signs of waning short momentum. Thus, after one final check of price action on all time frames, I decide to close out the entire short position. The 3-lot position was a profit of $1,765, and the 2-lot position was a profit of $1,162, for a total profit of $2,927. Keep in mind, the profit is shown in Japanese yen, but I explained it in dollar terms. The key points of this trade that I believe can help the beginner trader are: Number 1, know the overall environment that you're trading in. I'm not implying you should study macroeconomics or keep the news running all day. Just the major events will do. For example, the only news I incorporate into my daily trading is the non-farm payroll releases and the US presidential elections, and nothing else. Number 2, use your knowledge of price action on the lower time frames while you're in a trade to watch for possible situations where you should abort your trade, incrementally or entirely. Do not underestimate the power of reading price action on the 1 minute, 5 minute, and 15-minute charts. They provide the trader a tool that further refines a strategy's entry, stop loss, and targets. I hope this video helped you guys out. I'll see you in the next video. Thanks.